In terms of markets, the one film that I would urge everyone to watch, if they haven't, is The Big Short. And what I love about that is, firstly, and a lot of people, would say, oh, dividend yield's really important to me. Look at this thing, it's yielding 12%, until they cut the dividend 4 times and it's only yielding 2. You need to have a 3D analysis. You can't just take things statically in 2D and say, well, there's the numbers and it looks cheap. If you have a fundamental belief in something, back yourself. But back yourself with a strategy that gives the odds in your favour, if you like.
Welcome to another edition of Pips and Pints from the Banker. Here today we have Jamie Moyes, City legend, City veteran. He's been buy side, sell side, you name it, he's bought and sold it. He's also a viral sensation in his tartan suit at Cheltenham. Cheers, thanks for coming, Jamie.
Cheers, Party. A pleasure to be here and lovely to see you.
Oh, I was ready to act.
I've got to say, about time you bought me a pint. I've had 3 coffees, been gasping, and we're an hour and a half past serving time. So,
how would you describe that in the old days?
The worst piss up I've ever been on.
I think so. Anyway, we've had a game of pool.
Who won that?
It's best of 3.
It'll end up being the best of 17, knowing your maths.
At that time, who did we take out down to Shadwell? And we City PM guy and his analysts. We went to pub afterwards, didn't we? We were so drunk we kept going double quits until we almost did it a mortgage, didn't we?
Got there in the end.
Brilliant. And that brings me on straight away to attitudes to risk and the way that affects your psychology, and total open subject because it's something we can easily talk about for hours, and I'm sure we will. So what do you think? Well,
I think I first came across a psychologist when we didn't really understand what they were, but it was way back in the 1980s. I got selected, probably my highlight of my rugby career, for an England under-16 group that had some very famous rugby players like Kieran Bracken in it, and the rest of us sort of faded away into the history books. The psychologist was offered to all the players, but it was actually only the players that had key parts to play: the kicker, the line-out throwers.
So the old Johnny Wilkinson routine.
Yeah, and actually I remember what she said to him. So I asked him, "Is kicking improved by a factor?" And I said, "What did she say to you?" He said, "Well, actually, you pinpoint someone in the crowd at the back of the posts and just concentrate on that and relax and go through your breathing techniques, and all this stuff is, so common today, but back in the 80s, people were very sceptical. Yeah. But all I'd say is that...
It was having another pint and grow a pair, wasn't it?
Yeah, and I think that the world's moved on a hell of a lot, and the impact of psychologists or the understanding of mental health and all these issues is now treated very seriously, and quite rightly so.
I mean, it's something that, it's in our plans to really integrate, and it's massive. People talk about it all the time, their psychology. They can have the best plans in the world, but as soon as something starts going wrong, they're flailing. Well, as you would, everyone suffers with the revenge trade and also the other side, being too euphoric and thinking you're master of the universe. So I'd be interested just a little bit.
Yeah, I mean...
What did they say?
The swings, the swings of outrageous fortune, the highs and lows, and I think it's about how you behave during the lows and how you behave in the highs that kind of maketh you as a man or a woman, right? Yeah. And I think... you and I definitely in our careers have had some great moments where we think we're probably better than we are, and some low moments where we probably unjustly, suffer from a little bit of the dark thoughts and how could I be in this spot and all that sort of stuff. And I think that's because we're sort of got an entrepreneurial spirit and we're always willing to try things, and sometimes they work and sometimes they don't. I think if you take those swings and analyse how you really can understand at the depths of despair that actually, just putting a few things together and a few things right, and, whether it's, exercise, building on your own internal relationships with a family or whoever it is. And
you have to do those.
And you have to do that, yeah.
Shutting those down and just trade and invest and have nothing else, that's that's the start of a bad journey, isn't it?
Exactly right. It's collecting the wood from the garage so you can all have a fire at the weekend is, very simple, things and processes. Cooking a Sunday roast is always a favourite of mine, brings the family around the table and makes you understand what we're all about, really. And I think, in those low moments, you can look introspective, but you also need to utilise what's around you. friends, family, and all that sort of stuff. And it's a bit like I was saying earlier. Don't be frightened to have the conversations. It's amazing where you can get help from when you're suffering.
So you said that, the fact that you've name dropped Kieran Bracken, I thought we've got to get a few other names in there. Instantly, our old mate Pearsy, the Pearsy.
Oh, Pearsy, legend.
The story he told me about communication, when they used to go on tour back in the 80s, you were amateur, weren't you? You didn't get paid.
That's right.
All that. So if you were suddenly doing the South African tour, that's going to be 3 months unpaid unless you're getting sponsored and all that.
Yeah.
And I'm sure it was Jeff Probyn he used to talk about. He said he'd go home in the taxi from a night out or from after work, and he'd tell the taxi driver, keep it running. So what are we on about? So just trust me. And he'd go in and he'd shout to wife, right, I'm off now, love. And she'd go, what are you on about, Jeff? And he'd be into a garage, he'd got his bag prepared for months. Yeah. Pick the bag up and he'd run through the front doors. His wife's running down the stairs chasing him. Throw it in a bag and off they go, just to escape to get on World Rugby Tour.
It's a true story. His psychology was that his wife was going to give him 3 weeks of grief before he went on tour, and he definitely got 3 weeks when he got back. He says, I only got 3, not 6.
That's risk management.
Risk management, yeah, back in the day. It's Dear Pearsy, who's got more number 17 shirts than anyone in the world. But
I was when I was at university, Freshers Week, and it was we stood there watching a game where, again, he's on the bench and he sat next to Dowie Morris, and they sat there on the bench with a box of chocolate eclairs. Cameraman sort of panned in and go, like, what's going on there? It's at the height of fitness. And I chatted to him, he said, well, unless someone had their head completely knocked off, you were never getting on in those days. Like, whereas now there's 2 teams at every match, isn't there?
Yeah.
International sports back then, totally different.
Yeah. There was a infamous rugby player, played international for Scotland, only got a few caps. Backdoor Stevie, they used to call him. Never got picked in the side, but got a couple of caps from the bench. But you'd have the pre-match meal, and in those days you actually had a meal before the game, and everyone who's playing sort of, eating a lettuce leaf and all that sort of stuff. And Backdoor Stevie's shoveling it in. And he's like, are you not going to have your bit? And he's eating everyone else's and all that. And sure enough, within 10 minutes, he comes on, and the other one was down in Cardiff and Scotland with 3-3, a real nail-biter. And it's half-time, and in those days you didn't come off the pitch. You just did a wee circle around the captain. The captain's given them all an absolute leathering, telling them what they must be doing in the second half if they want to be selected again for the team. And Backdoor Stevie's come on again, again with a full belly of food. And he's looking over the captain's shoulder. He says, Stevie, what the hell are you doing? You've got to be concentrating. He says, I'm just seeing if I can see my mum in the crowd.
Peripheral vision.
That's it, yeah. So, and peripheral vision in markets is having those conversations with other people who are going to see things that you don't see and see things from a different perspective. We can all fall in love with a trade, and that's the worst thing ever.
All about angles, isn't it? Stuff that I'm trying to do, and a shout out to people who actually have been using my channel. They say they're watching today. Vivi and the team, they've been doing some good interaction on there. These are people that are engaging in this and want to know how fundamentals work. And it is important because you need to have the background to. I said it, if you want to develop and have a career in the markets, you want to raise money as you get older, people aren't going to throw money at you if you can't tell the story. You've got to be able to backstory it out, haven't you? It's not just, there's lines on the chart over there and I've done this, I've done that. They might give you a certain amount of money, but they're not going to give you the full allocation, are they, if you can't present a solid case? Yeah,
that's exactly right. And I think perspective is something you spoke about earlier, is understanding perspective. And at Christmas, every year I try and bring 10 interesting facts to the table. And you got an age range in our family from 84 to 3, right? So you got and one of the ones I brought from financial markets was, did you realise that the FTSE 100 index, if you added all the market caps together, is smaller than the market cap of Apple?
Exactly,
yeah, my brother-in-law works at Apple, so it was relevant as well. And I think that's perspective, right? It's understanding the big forces that are out there, and actually, through my career looking at the FTSE 100, really, and the UK markets, I probably didn't quite realise that global events, things that are outside my immediate location, were having more impact sometimes than analysing those stocks inside out, and you're wondering why it's not performing, and then you realise, well, obviously it's a dollar play, and have you seen what's happening to the dollar? So you've got to have the periphery vision to understand, yes, I understand the fundamentals of that company, but what are the big drivers and what's happening to those big drivers? So I think it's really important, and that psychology of understanding what it is you do know, and then knowing what you should know, and utilising your network to find out. I've got some great.
I still use the old the Donald Rumsfeld for all that. Remember the old known knowns and the unknown unknowns. Obviously, park those because you have to be a space traveller to know those. But the ones in between, the known unknowns and the unknown knowns, the stuff where you should have it within the realms of the facts you've got, and the ones where we know what we've got to wait for, we just don't know what's coming.
Yeah.
And that to me is the areas that you have to concentrate on, isn't it?
Yeah, absolutely right.
You piece it all together.
Yeah.
But it's funny that because when NVIDIA report, it's like the overnight would have just moved up a Shell, and then they opened up a Pepsi. It's absolutely incredibly. In our lifetime, I've seen things so instrumental, so influential.
Yeah, crazy, and very often people can be too early to a trend, right? So I remember a great story back in 2000 with the dot-com boom.
Yeah.
And
because people are still talking about trying to reference it to Cisco, who were making no money. I don't have to go in there, but
for me, it was a boom bust boom.
Yeah.
Because ultimately,
when I still remember, because in those days, program trades had real impact. Knowing there was BGI always used to hit us at UBS mid-year. Yeah. Right, your profits for you, they're on risk now because we're just ripping you out of everything.
Yeah.
Just as the market's about to go. But there was what you probably know it was. It's not either the co-op or someone did a massive sell, didn't they, right at the bottom in 2003?
Yes.
Just on the turn, going on, right. It's over forevermore, and that was the bottom point, wasn't it?
That's right, and I think that's coming back to your point about psychology. Is everybody was absolutely right on .com in the boom. The market went to the moon and back to below where it started. Everyone disbelieved it, and yet the real winners from the internet sensation were then to travel and make highs and highs and highs. I remember
right now, don't you? You read Jimmy on the other week. He started and he was trading in the futures pit, or maybe in stock. I can't remember what he said now. In '87, when the US halved.
Yeah.
But you look on the chart now, and it looks like a tiny blip, doesn't it? It's ridiculous. It's
the story I remember from the dot-com boom was there was the companies in those days, if you remember, were announcing, we've got an internet site, and their market caps were doubling. Yeah. I mean, literally, it was as silly as that. Nonsense. And this company sponsored, I can't remember the name of the company, it sponsored the Welsh Rugby Union, and it did a 3-year deal, and it was on the front of when rugby first did advertising, on the front of the shirts. It was on the front of the shirt. And to the embarrassment of everyone, including the Welsh Rugby Union, the market capitalisation of the company that did the sponsorship deal was smaller than the sponsorship deal 12 months later.
Brilliant.
So there's an anecdotal one for you. Yeah. And you had crazy situations where in uncrossings in the FTSE close, where Batam, I think it was at the time, was uncrossing, 30% higher and whatever else.
One, wasn't it?
Yeah, that's right. All crazy prices, and it was all everyone's got to have it because they've got to redo their index weighting if they're a FTSE tracker, and it was all these buzz.
No
one knew where they were. Yeah, exactly.
So I was saying, at that point, I think we were still together at UBS, and I had people coming up to me asking the ins and outs. Some people, MDs of trading and stuff, coming up asking me, what's your thoughts on this? I'm thinking, brilliant, I'm be able to take a position on the book. And it'd be like, I've read for days all about Marconi breaking up, this, that, and the other. Oh, brilliant, I'll keep the PA then. Oh, for God's sake.
Yeah.
We'd have, certain famous sort of colleagues of ours who went on to set up hedge funds, throwing back their £1 million bonuses because they were making more PA. And it's like,
yes.
What you're talking about? You can't do that.
Yeah, for sure.
Totally mental, isn't it?
Yeah, there were mad days for sure.
But Reece, you mentioned earlier, he had a Cisco situation. Do you remember that? In an auction, didn't he? Wasn't he famous?
I think that was it. Not Batam.
Was it not?
Was it Batam? No.
But I don't know. Wasn't there? There was a crazy auction where he moved the thing about 30%, didn't he? Just to get the. I can't remember. We'll have
to go back into the archives for that one. Yeah, for sure.
So, like you said at the start, you have done most things in the city. Do you want to just have a quick recap of the kind of things you've done in perspective of financial markets?
Yeah, so look, I mean, I was a graduate trainee at Smith Newcourt, the last ever, because Merrill Lynch bought them very quickly thereafter. Yeah. And then it was in a very, very buoyant market, and I'd just lost my father, so I was helping my mum out a bit, so I actually moved quite quickly into 2 different jobs. Went to Dresdner for a couple of years, then went to UBS because equity salesmen were few and far between of my sort of generation. And I really, really enjoyed, learning a lot through that process. Where I really learned how to be a stockbroker, I think, was at Collins Stewart under Terry Smith, who was a very, very hard taskmaster, but knew his fundamentals.
These are infamous people that know things to the nth degree, don't they?
Yeah.
When you talk about doing your hard research, these guys, there's no I and T crossed or dotted, is there?
Terry obviously, was instrumental in creating the cash flow analysis that we all lived and breathed by. And
am I right that he did the note on Euroturn? Was that they can't recommend a purchase? Was that him?
I can't remember. Terry's written so many infamous notes. He used to be a banking analyst at UBS many years ago.
May and may not have been him, but he wrote a note on Eurotunnel and wrote with capital letters on each word, can't recommend a purchase.
Yes, quite.
So that was his kind of nuance, wasn't it?
Quite possibly, yeah. So he created Quest, which was our valuation tool. It was all based on cash flow analysis, and ultimately throughout all my career, people use different valuation tools, but a lot of the valuation tools could be manipulated. And if you thought something looked expensive, you just did a forecast 3 years out, and it suddenly looked cheap or whatever else. But the cash flow analysis was very difficult to beat.
That's why, again, going back to the technicals, and there's so many, and there's new mnemonics turned up that you and I would go, what the hell is that? And it turns out it's repackaging of stuff that we've learned. But even said, by definition, there's so much AI and changing it all the time. They're getting tweaked.
Yes.
And then, by definition, they're not going to work for too long because it gets eroded away, doesn't it? Which you'd always expect, and that's always happened throughout our careers. There's something that works, and it then reinvents itself, doesn't it?
Yeah, that's right. I think fundamentally the cash flow analysis will always work, and sometimes people can get too
you just dress it up.
too clever with things, and certainly
cash is always king, isn't it? When it comes push to shove, you want free cash flow, particularly if we do get this inflation environment coming back. And this is why certain indices will lose and others won't.
Yes. And a lot of people, would say, oh, dividend yield's really important to me. Look at this thing, it's yielding 12%. Oh, until they cut the dividend 4 times and it's only yielding 2. So...
You're locked in and you've lost half your money.
Yeah, you need to have a 3D analysis. You can't just take things statically in 2D and say, well, there's the numbers and it looks cheap. You've got to look beyond that. And I think that's where cash flow analysis really helps because it's more dimensional.
And that's for that when you're looking at global indices and stuff, it does transfer. It's the fact that you've got to look at it. And if things look wrong, things look like they've changed, you've got to change your view. And which we said, don't fall in love for what you want to happen. You've got to do it for what it is. Yeah, that can be intraday and overnight.
There's a really interesting debate going on in FTSE at the moment, isn't there? Because FTSE's been the massive laggard.
And now it's outperforming.
It's catching up. My call on it is that it's going to break out. And I think, 8,000 was already very hard to achieve because it had been 7,000 something or 6,000 something for a decade.
Well, I'd had that set up classically like a lot of other people. It's in a sideways consolidation. And I said, when this is starting to change, so I like to draw those trend channels to show you the gradients, remember?
Yes.
But the gradients are getting steeper. To me, that means you're starting to impulse. I said weeks ago, so we might have to redraw this. And I'll wait to see if it breaks that previous highest change. And I've rewritten it, and it now looks super bullish. We've got to go with that and just... we knew it was in an up leg as part of it.
Yeah.
Now it's actually not.
So I would say FTSE 9,000, very, very quickly. Yeah.
Which would be classic, wouldn't it? That you've got all the headlines, London, FTSE, no corporate anymore, no IPOs, absolutely in the doldrums.
Yeah.
I actually wrote it today in the tweet. London, we've learned about the city from the coffee shops from our insurance side. It reinvents itself. It always has done for 300 years. And it will do again.
I think that's right. And, FTSE breakout is really just a bit of catch-up in many ways. But, it's still dollar-denominated, so just keep an eye on the dollar.
FTSE is an international index, isn't it?
That's right.
People forget, it's not the 250, it's not UK PLC. This is global.
Yeah. And also remember the bit that I said about Apple being a larger market cap than the whole index.
I know.
So, in some of what you said earlier, it's right. FTSE could be performing nicely and whatever else, but the relevance, is still got to be put into perspective.
As well. So
yes.
You've got global growth coming back, you've got China kicking stuff out. Funny, I was amazed overnight because I've been saying Germany, needs China to kick up. That'll get Germany going. Turns out that import beat in the States, it's all been from Germany. Germany is the biggest exporter into US now.
Is that right?
Yeah. Whereas it used to be China, where it was our end market. So these things flip.
They really do.
You've got to keep an eye on it. That's a massive change, isn't it?
Yeah. And I don't know if you've seen of late, but I love markets when they're functioning. And there's been a few instances recently where they become slightly dysfunctional. And
what do you mean by that?
Well, I think, let me give you a couple of examples.
I think this will be really important for people to hear that.
Yeah.
This is a nuance, isn't it?
And usually it's sort of liquidity driven more than anything else. So you've got to understand the philosophy of why do companies list in the first place, and usually it's access to capital so they can fund their growth, right? Otherwise, you'd be, if you can fund it yourself, you'll be like a Cargill, one of the biggest private companies in the world, and you never need to list. So companies generally list for access to capital, and that doesn't matter if you're a FTSE 100 or you're a small cap. But in some of the small cap spaces where the audiences and the investor participation isn't so institutional, those companies have in many ways been let down. And there's a couple of examples of companies delisting at the moment, particularly in the smaller life sciences space. And a lot of people think, well, that's outrageous. Why do you delist? And they delist really because they can't raise the money on the market because the institutional support isn't there at this moment in time for that subsector. And people think that it's not the right move, but if you're rational and you run those businesses and you've got support from larger private investors who say, look, actually, the quote's not necessarily we can fund you privately, then some delistings have taken place recently. And I think that's some of the frustration with capital markets is they're great when they work and they're not great when they don't work. And
so when you get a delisting, what's likely to happen to the share price?
Well, in the example that I quoted from yesterday, OCT's share price got decimated. It fell by 50%. And that's because, of course, a lot of people can't hold the private paper. So you tend to get an overreaction to the news. And it's understandable from both sides. I see both sides of the argument. But ultimately, it's rational from the people running that business because they've got access to capital elsewhere that they can't find on the open market.
So to me, that I instantly ears prick up. Not even been watching that, and you're thinking whenever I see irrationality, it's like pencil out. Right, we need to do some numbers because this is normally when there's opportunities, isn't it? Once something is mispriced when you get things moving like that. Yeah, and
this
is what you got to think when you see indices and qualities suddenly have big spikes.
Well, there's rules and
panic. This is the opportunity. This is what we're waiting for.
Yeah, because there's rules and regulations, right?
Something's wrong, isn't it? Something's out of place.
Yeah. I mean, I remember trading for a hedge fund back in the day, and on the triple witching expiries that used to induce a lot of volatility into FTSE, and it was when
this is triple witchings at the end of the month or end of the quarter, isn't it? When
all the options and
expiring at the same time.
Yeah, and
under overs, people defend levels, don't they?
Yeah, and they're trying to drive the FTSE up. They're trying to drive it down. Yeah. And I remember with this certain hedge fund at the time saying to them, "Look, I just feel that this Friday is going to be a massive fight because the levels are all over the place, and FTSE could go up and down a lot over that period of time. Why don't you leave me, 5 limit orders, 5% above market, 5% below market in that stock." Let's just choose big liquid ones. They were like, okay, fine, do BP, Shell, Vodafone, all the normal ones. Well, both sides got touched,
exactly.
During that process. But there was no rationale for it other than there's going to be some induced volatility here for things that are outside of our, normal life.
This is a problem in this space that, news trading causes all sorts of angst and people sometimes gamble over it and the rules tend to try and stop you. But if you want to play, use limits. If you think this is a piece of info, rather than go, it's a random walk or it's always volatile, there's no point, use it. Put limits in. Be willing to buy and sell at the outliers. So,
and that's both.
Reversion generally happens around news.
That's both way rounds, right? So entering a trade, you don't need to go and buy it there and then. Maybe buy 20%.
About slippage and commission. Put a limit up.
Or buy 20% of it there so you're watching it. And put your lower limits in that if it comes off, you're buying them. And likewise, on the way out.
Earlier, don't go all guns blazing first trade. Give yourself scope. And you mentioned it during a pool game. Good traders like Bamba, etc., there would always be trading a position. And by that means you don't buy and sell the whole thing all the time. You take a little bit off so you can sell it again, or you can buy more if it comes off.
Yeah, exactly.
If it ever got, it's very rarely you'd be at zero.
Trading around a core.
Trading around a core both ways.
Exactly
you
right.
can do that with your winners in this, and you'll be amazed how suddenly you're in the game ready to really know when to press go on the 5-star, don't you?
And never be frightened to do something, even if you like something and it's a sell, because mathematically the position has now got bigger, and you should probably be letting a little bit go.
Absolutely.
So that's averting the falling in love with the stock idea or the indices idea, or.
I said it earlier again. I mean, the UBS salesman I was like incredulous as a yank, going, "What on earth are you talking about? There's no one going to sell a stock that's going up." And they go like, "Seriously, I get all my best punters, and then the ones that make the most money feed the market."
Yeah. Well, you got to get out as well.
And everyone's going, "No, it's momentum. You don't let go of momentum when you do, because you got to get used to getting in and out."
Nothing goes in a straight line.
It's all the old classics, certainly, 10% for the next man.
Including me in a couple of hours, I hope.
Yeah, exactly. You need another beer.
I need a top up.
Briefly touched on your influences in your life, and I'm sure you've got some films and things that influenced you. And I know with your Scottish heritage, you're going to say Braveheart, so you can park that one. All right. So what else has driven you over the years?
Well, I think if you look at it in terms of markets, the one film that I would urge everyone to watch, if they haven't, is The Big Short. And what I love about that is, firstly, it's anti-consensual, right? So everyone's generally bullish, and so you get positions where things are overextended. And clearly, we all know the outcome now, so it's not as exciting. But at the time, and the film was well researched, so these people really did exist. And you've got the same access to information for everybody, right? It's all there. It's just about going out and doing the hard work and finding it. And you've got the hedge fund guys who are on Wall Street, and you've got these two young lads who are in the back of a garage in the middle of nowhere, right? So, and they all make huge returns from the subsequent crash. And I just think the lesson in that is, don't worry if you're kind of not associated to a big investment bank, or you're sitting on your own in the middle of nowhere. The information's out there, and we've all got access to it.
Do the hard yards, isn't it?
Do the hard yards, and if you have a fundamental belief in something, back yourself. But back yourself with a strategy that gives the odds in your favour, if you like. So, you can.
It only has to be a small tweak, doesn't it? As you said, you haven't got to be 90-10. This is
small
large size with
small margins. Small margins, and compounding those small returns, as we spoke about earlier. And taking your time to do it. And let's face it, in the financial crisis that we all, saw 2005-08, you didn't need to sell on the first bell. No,
there was ample opportunity.
There was ample opportunity to take part on the short side in that scenario.
In fact, you mentioned, it's going to come up a couple of times in this section, because there's an old colleague of ours, again, a man you send in to do the numbers, Gareth Hunt.
Yeah, great man.
And before we get on to the main one, just what you've been talking about there, we had our own microcosm of The Big Short, if you remember rightly, Northern Rock.
Yes.
And Garth had been researching them, knew the regional manager, didn't he? I'd just taken out a mortgage with Northern Rock, and unbeknownst to me, pointed out that I think it was something like you could leverage it 10 times by whatever you wanted, as long as you could prove you got, a 10% free cash flow or something?
Oh, it was
something
unbelievable.
Completely ridiculous, wasn't it? And Northern Rock in Newcastle didn't realise what they'd written in the southeast, did they? And we always knew what was coming, so we were kind of...
Yeah, I think the mortgages were like 120% of the value of the property. Yeah. And you could revalue the property very easy.
I ended up in that bad book with never missed a payment. Well, for God's sake, what I've done is taken out a mortgage.
Yeah, there were crazy times. Yeah. And of course the banks, in terms of property lending have, all shrunk, and that's why you've got, great entrepreneurs like Simon Champ, if you remember, Champy's, set up his own business that lends to...
He got into the whole crowdfunding thing, didn't he?
Yeah, and funny enough, the crowdfunding bit was he would offer the supply of capital to the market, because there's lots of people that wanted to borrow money to buy a car or a new kitchen. And, I remember him building out a fund that was over a billion quid, quoted company. And he said the best performing, loans in that whole period of time were actually to house builders, mum and pop house builders who you'd get a first charge on the land, and then you would, basically as they sell down the plots, your loan gets repaid. And if you had an LTV of something like 60-65%,
if you do the conventional way, you're sweating every step of the way, aren't you? You need confidence that's coming.
Yeah, and I think that what's turned out is Homes England have just backed his fund with a £130 million cheque, I think.
But there's a guy that quite rightly. I mean, to a certain extent, has he got, no disrespect, some kind of ADHD? He over concentrates on something and he goes for it in a big way. Does all the research totally. Yeah, when Jack goes for something, it's 100%, isn't it? And that's what you got to do.
And like all the good guys out there, surrounds himself with really good people. So Newstead Capital is what it's called. Great business model, and he's got some really, really clever, as he says to me, these mathematicians that do all the numbers for me. They're
always pull the drawstrings together, isn't it? It's it's all
having the vision.
Vision in bringing the strands together. Doing the hard work, isn't it? You're not going to do any of this for free. Someone can put that hard work.
And I think the very successful people who have a bit of modesty around them always say, "Well, how did it happen?" He said, "I just surround myself with great people." And understanding that means that you've got a really positive approach to life.
So within all that, we've already touched on loads of brilliant people we've traded with, and we just mentioned Garth as one. Over the years, that getting things done, and you've been on the deal side of things, it's about really understanding your local customs and sometimes having to go to extraordinary lengths to get a deal over the line, isn't it? You've got probably some stories I've ever heard.
Yeah, well, I've got dozens of stories, but the one that I'll pick for you today is when we went on a trip to China. And I'd been brought up in the Far East, actually, so I knew the culture in Asia and particularly China and Hong Kong. And
it's a shame that dimwit we used to work with at somewhere or other. Not dimwit, dimwit's harsh, but you'll understand why I've said that. In an HSBC meeting, which was a coup at the time to get a large company like that in the building, was he advised them whether they'd thought about moving into China. What's the mnemonic, King? It's Hong Kong and Shanghai.
Shanghai Banking Corporation. Yeah, exactly.
So literally know your numbers before you go in.
Yeah. So I remember I was working at Colin Stewart at the time, and we had this idea that you couldn't invest directly in China, as a sort of foreign entity that easily, and it was difficult sometimes to get the information, and for all sorts of different reasons. But what you could do is you could set up an offshore fund, list it in London, and then you would find local investments in China. So it was a great idea. We raised the money, but we had to do the due diligence trip to China and make sure that the people who we were investing in, would allow us to buy percentages of their business.
Parlance, don't fuck it up.
Exactly right. Okay. So we flew out to Shanghai and Beijing and did a few meetings. But the last meeting, I was thrown what you can only describe as a curved ball. I saw Gareth chatting in the corner to some quite senior government officials who would be deciding whether our investment proposition would be accepted or not. And this was shortly before we went for a banqueting dinner. And 5 minutes had passed into the dinner, and a tray of drinks had come round, and we're offered these lovely ice cold local beers, and so we had a couple of beers, and we were just generally chatting, and we had an interpreter there who was helping us through the process. And then I recognised that somebody else was at the table who hadn't been there earlier in the day. And this character can only be described as a sort of Bond villain. He had a scar across his face and very wiry, but you could see that he had lived a life. And all of a sudden, the chairman of the local Communist Party, who was at the dinner, said, "Right, now's the time. We get your drinking champion to take on our drinking champion." And so I was like, "Well, this is interesting. I wonder who our drinking champion is.
And you one look at Garth.
And Gareth looks across and goes, sorry, like this. And I'm like, you have to be kidding me. So in China, the rice wine, it's a bit like Scottish whiskey. You can have a good one and a bad one.
Right.
And these were exceptionally good ones.
Okay.
But, in other words, expensive, relative, but they were very large. And normally you'd take a little shot glass of rice wine and say, isn't that lovely, as a sort of, after dinner or a pre-dinner sharpener, like a tequila or something.
Yeah.
These came in half-pint glasses that were full to the brim. And I looked around the table, and Scarface and I were the only two that had them in front of us. And when the chairman clapped, we were to dispose of these rather large rice wines. And so I thought, well, in for a penny, in for a pound. We need to get the deal across the line.
Risk waiting all the way along.
Risk wasted all the way along. Bolted the first one. Which I thought, yeah, okay, I'm going to keep everything down. I'll be okay. Got through it. Isn't that fantastic? Only to find the lovely waitress filled the glass back up again. And it was round two. By which point I'm thinking, I'm a lot bigger than Scarface physically, but I can see that he's probably done this a few times before. So I'm rattling through and wondering, how can I get myself get out of jail free card? And I thought, volume. Volume is the way that I'm going to win this.
Always said, volume is the king.
So as I've literally forced the second one down and thinking this is going to be so embarrassing if I need to leave the table, I asked very politely to the interpreter, would Mr. Chairman mind if I chose the next two drinks on the basis that they had chosen the first two? Mr. Chairman says, this is a great idea. What drinks would you like to choose? So I asked for the cold beers to come back. And
Are these what, bottles or cans?
These are cans. So I, for whatever reason, had my house keys in my suit pocket. You know, it's like when you're on these journeys, you sort of... So I had these house keys and I thought, yep, it's time for a bit of a shotgun. So I punctured a hole in the can, pulled the trigger, swallowed the can, crushed the can, and asked the interpreter if Scarface would like to repeat the performance. And obviously Mr. Chairman, looking on, says, carry on, Mr. Scarface, who attempts the very same thing with beer going everywhere, drinks half of it, and to my satisfaction, the volume on top of the rice wine that we'd already had enforced him to make a rather quick exit, never to be seen again. To which Gareth gave me the double thumbs up. The next day we signed the deal, Mr. Chairman with his arm around me, and we survived to tell the tale. But it was a hairy moment. And
always expect the unexpected, isn't it?
Absolutely right.
Do your quick thinking, react, watch your stop loss.
That's it.
It's all in there, dressed up. Absolutely brilliant. Oh. What else have we got left to talk about, Mr. M?
Oh, I don't know, I think we've covered most of it.
Let's have a little get that. Yeah, so we referenced earlier the viral sensation that is Jamie Moyes, tartan bedecked, at Cheltenham, doing something that I hope we'll see in a few minutes' time. Your age-old trick. Talk us through what happened at Cheltenham.
Well, I mean, you know, I love racing. In fact, I'm involved with a very good friend of mine, Pete Burrell, in a new syndicate called Spirited Racing, which is based out of Hungerford, and you know, a lot of local trainers. You know, Ollie Sangster, as an example, who's got a great hit rate rolling on from last year, and he's already had 3 2-year-olds as winners very early on in this season. So that's it. So that syndicate, Spirited Racing, has its first runner on the Friday, the 17th of May, I think it is. So not too long to wait for that. And I've forgotten the question, so you'll have to say it to me again.
Age old. It's time you put the fight on your head.
Yeah.
Just to talk through what's
So they've got their first run on the 17th of May, and I was with Pete that day at Cheltenham, who tapped me on the shoulder and said, someone's walking behind you towards it, and they've got what looks like a microphone. I was like, oh, happens to me all the time. Don't you worry about it, Pete. Thinking clearly they'd walk past and find someone interesting to interview. But I did have my tartan suit on at the time,
Standing out, as usual.
this lovely lady taps me on the shoulder and says, "Excuse me, could I interview you?" To which I say, "Well, of course you can." And I'm thinking, well, I probably don't have too much interesting to say. I like my racing, mostly for the social rather than really understanding all about the horses. As we said earlier, I have experts that do that for me.
That reminds you of a story.
And so she interviews me, mostly about the suit, which was from Deej and Skinner on Savile Row, but it was 26 years old, so there was a bit of a story there and how I could still fit in it, but the waistcoat wasn't there, and a little bit of a story around that. And then the infamous pint balancing, where I put the pint of Guinness on my head and bobbed up and down. Unfortunately, it's quite difficult because the village there at Cheltenham has a lot of wind.
So it doesn't in that dip there, yeah.
And I was in a plastic glass, so I was thinking this could go horribly wrong. And I hadn't had my hair cut for a bit, so I had a bit of bouffant on top. So I had this plastic glass with only a bit of Guinness in it. So I had to really concentrate. I can't tell you how much I had to concentrate on that one.
I mean, I haven't seen you for a few years, but I haven't ever seen you drop it. I've only seen you drop it when it's light, so I can understand why.
Yeah.
And that was an empty one.
Yeah, I've got a good hit ratio. Mostly it's when you're showing off. Someone sees you showing off and they just give you a little nudge in the back you can't see, which is, those are the hard lines. But
what was your position in rugby?
I was a hooker.
See, so you're used
number
to
two.
That,
Used to the nudging. Yeah, exactly right. Yeah.
We'll have a go at that in a few minutes, Jamie, if you don't mind.
Yeah, well, actually, do you know what? I'm going to use that. It's got a little bit of a better shape for me.
Have you got him?
And then we're going to go, I think, probably here. So it's a little bit empty and it wobbles a bit. But once you actually don't forget my wicket keeping last night, but once you actually keep your head straight and you're doing a little bit of that, if you're driving up, it's that hooker position again, against the head, then it wobbles, but you've got a bit of, hard inner core strength.
It's always, isn't it? Repetition. Key to humour is repetition.
Key to humour is repetition. That's it. In fact, my great mate Chief, as you know, who worked at Sporting Index for many years, is now in...
I was in a box with Spreadex a while back, and they'd just taken them over.
Taken them over.
Realised.
Yeah.
He actually, young, forgot what's his name, but he sent his regards to the guy that runs...
Yeah.
He said he knows Moyes.
Oh yeah, good man. So the chat with Chief, we'd be out with some of his clients and messing around over the years, and it was like, right, it's time for the balancing, and I'd be like a performing monkey over the years. So yeah, exactly right. So I'd send my invoice in, as I will do after today, of course.
But when you were mentioning about with the racing and going the informed, do you remember that infamous one where we went on Riberack when I did the research?
Yeah.
I'd come across this horse that kept it in training, a filly, and it won about 10 races in a row. Mark Johnston, and they kept it going. I couldn't understand why, because it had been a mile two, and the following year they ran it a mile. I say it was a miler, and then they ran it a mile two, but ran it flat out over the mile. They kept on. I said, what are they doing? This horse is brilliant. They're just ruining her figures. And we watched it, didn't we? And all of a sudden, entered for the Goodwood Mile, and went, aye.
Yeah, and now we know.
What we need, what's special about Goodwood? Well, they need a draw between 1 and 12 if it's going to be a front runner. Gets the old 6. Kevin Darley jumps off his horse to go on it. We go, Moyes, I think we have just identified
what could possibly go wrong.
We're still at UBS, aren't we?
Yeah.
I must have had 20 punters on that.
That's
and in
right.
those days, no, you got the occasional tap on the shoulder. Can you calm it down? But everyone was ringing the 0898 numbers, weren't they? And listening to the
commentary.
I've never seen so many active people on the phone at the time of the Goodwood Mile.
Yeah.
And then about halfway through, as it reached the corner first and was in front, and all it had to do is hang on. There's people out of the saddle, aren't they? Go right at home.
Yeah.
All we had was people jumping up and down.
Brilliant. Like I say,
it was the biggest concentrated winner ever on a training floor.
Always get people, to do my research. Although there was one I remember at Dresdner. I was only there for a year between Merrill's and UBS, but I remember me and Simon Champ sat next to me, and we got really into our darts. This is way before the PDC and everything.
Before it split.
Yeah, before it split. And we were looking at Raymond van Varneveld, who was a great Dutch darts player, still is. But he was new on the scene, and he was 14-1 to win it. And we really fancied him, and so him and I, had a little bet on him, and I think those days you do it each.
He was into evens then after championship.
Yeah. So we had a little bet on it. We would do it each way, so he came first or second, and a couple of the traders, and in those days you had massive trading desks at Dresdner, were trying to take over the world on trading volume, really.
Brilliant.
And couple of the head traders came up, tapped us on the shoulder and said, we hear you boys know about your darts. Who do we back in this thing? We said, well, it's Raymond van der Weyden. He says, oh, right, OK. Back in 5 minutes. And one of the blue buttons or the junior traders had run around the desks and came back with a shoebox and said, we'll have that on the one you choose. And I opened the shoebox. It was full of cash, of course. So I sort of looked across the champion. I thought, we better split this up and go to different bookmakers to try and get it on, because we're never going to get the full bet on. Anyway, we got this bet on, and sure enough, he gets to the quarters, he gets to the semis, and champ and I think, well, we better go down there and watch the final. So we went down and watched the final, and sure enough, Raymond van der Weyden wins the title, holds up the cup, and holds up one of those big sort of, checks, the big board like that, and it said 14,690 quid for the winner. And I thought to myself, did the calculation, thought, we've just won double that back at the office.
Thanks, Ray.
Yeah. So then it became about sort of handing out the right amount to whoever put anything on, and we got a bit of a name for ourselves. But fortunately, we didn't give any further tips. So that's the thing. Is
the legend intact.
Yeah, keep the legend intact.
So you touched on something there that is interesting, having to spread your bets out, and that works in the markets, doesn't it? And for all these guys, again, can't say enough, rushing to get everything on at the same time. You're just signalling. And it's like there's a lot of kids on Twitter, they're doing well and they're sounding off. I was saying something the other day, when in our day, the last thing you did was talk about it, wasn't it? And if you're trying to get a position on, you've got to keep it quiet.
Yeah.
So a bit of humility, take your time, do it slowly, spread it out. It's got to be
Yeah, it's almost like a different part of the brain, isn't it? You've got to take the emotion out a little bit and become a bit more systematic about it. And I think that gives you a greater chance of success. A small rounding into compounding those percentages is the way forward, rather than going, right, I'll go in and have red or black and it'll all be over in 5 minutes. It can make for a very early night.
And that leads me into probably what we're going to wrap up with, I think, today, is we started, how we both, as we know, started in a sort of risk analysis insurance type way. And I'm kind of back at a analysing type way. And I know you have certainly gone full 360. Do you want to talk about the two insurance things in your life? Or
Yeah, so Everest Insurance I work for now, have given me an opportunity to introduce new product lines to them. And I think that's because a lot of the guys who I work for on a product in a different insurance business, saw that I can create things that perhaps don't currently exist. And some of them work and some of them fail, and we've all experienced that.
So, as always, I just want to wrap up on this, Moyes, because we've been really illuminating there. But just to remind people, there's a couple of poignant things here. We both came from a sort of insurance background, risk analysis. I'm back analysing. You started in insurance, and you've done a 360, and you've got a couple of really interesting projects on.
Yeah, so I'm very fortunate, actually. I think I probably found my sweet spot, in my sort of 53rd year of being around, but also 33 years odd of career. And it's what I'd say to people out there is don't always find your sweet spot straight away, and that is in creating sort of new insurance ideas and developing those. And I'm very fortunate to be backed by a big US insurer called Everest, and my job for them is to think of things that people haven't already thought about and see if we can create an idea. I'm also a founder of a business called Gecko Risk, which actually started out being an insurer for EV vehicles. And what we found, we went to the insurance market to get capacity, was that the reinsurers really didn't like the risk. Okay. I think it's because EVs are such a early adoption in terms of the cars that are on the road now really are like prototypes to what they'll end up being.
Mass sort of liability event.
Yeah.
In the early days.
So you got 1 million EVs on the road against 35 million cars on the road. So we know the direction of travel, but what we're trying to do is help the insurers and other aspects of that market with data. So we've collected over 80% of the data on EVs in the UK, and we're now going to deploy that into the marketplace. So that's a really interesting idea, and the two guys that run it, James Fisher and James Cotton, are great guys, and I'm really an advisor to them and helping them on their journey there. I think watch this space. I think the government's got some very aggressive targets for when it wants to stop deploying diesel and petrol engines.
Just at the time they become more efficient than ever, yeah.
Exactly. And that journey is going to be a long journey for everyone who's involved in EVs, and the infrastructure's not there yet in terms of charging points, but also infrastructure that people don't think about. So you've got young, kids coming out of college or whatever else. There really should be a government-sponsored, enterprise scheme or apprenticeships who could become, EV engineers, because there's not enough EV engineers. And
it's just a basic. I was reading there's not enough EV mechanics, are there? So
that's it.
Yeah, the market needs to adjust. This is
exactly right.
I've also incentivise. Don't be destructive. It's all about bringing people forward, isn't it?
That's exactly right. Yeah.
That's very interesting, Moyes. So I think there's only one other topic that you can possibly talk about in terms of risk, and that is, what do you do normally? How do you react in a humorous way when faced with risk?
Well, lots of different risks out there, aren't they? But I do remember a story back. We were on holiday in Thailand, and Chiang Mai is famous for a few things, unfortunately mostly war-related, but it does have a very interesting place called the Snake Farm. And I remember being shuffled to the front of the Snake Farm as the entertainers would come out, and initially the curtains would go back, and suddenly you see these snakes in front of you, and most people in the front row were diving into 3 rows back as the introducer says, welcome to the Chiang Mai Snake Farm. It's many snake here for you, but this one is a jumping snake. It's a no danger snake. So I was happy to sit in the front row, and everything was fine. These snakes were jumping about 7 foot. They were amazing. And I sort of looked around, and I was only 2 or 3 of us in the front row. Everyone had moved back quite a long way, and then the next guy came on and said, this one is the danger snake. You're a king cobra. A king cobra, one bite, you're dead. Like that. And at that point, we were all out the front row and straight to the back. So, managing risk in different ways. I'll take on the jumping snake, but when the king cobra comes out, I think we all better move back.
Although I reckon you've got one more defence against the king cobra, probably, haven't you? How else
I think if it was just me and the king cobra,
how would you do?
They're up doing their dance, right? So I think we'd have to go to we have to go to the southern hemisphere here, and obviously it's really a New Zealand heritage. But I shared a room at Loughborough with a great rugby legend called Danny Rouse. Danny got about 50 caps for Fiji. He was originally a number 8, and then he sort of had too many curries with me, and he ended up being in the front row. But Danny taught me the Nandi haka. Nandi's sort of a Fijian city, and the Nandi haka I'd probably bring out for the king cobra, which goes something like this. Tayarua tulu fasi, tumutumu kandian sandre andrea, tumutumu kandian sandre andrea. Au main putukun nongurawa, au main putukun nongurawa. Si ai, si ai, si ai.
Yeah, absolutely. So, ladies and gentlemen, if you've got your nerves back after that, I think you'd all admit that's been a wonderful journey through everything risk-related, right to the end of facing imminent danger. Moyes, that's been an absolute pleasure to sit through.
Top man, Planty. Lovely to see you, mate.
See you, mate. Top man.
See you soon.